Alright, today we're going to talk about the stock market. My name's David, you can call me D-Dubs, and this is Let's Quit Our Jobs. We're going to talk about the stock market because it's very important to making sure that we can quit our jobs. What is a stock? I take this a Lego tower that I swiped from my kid's stash. This is one company. If you break it apart, some of it falls apart, but these are stocks. A company will take one company and they'll break one of these companies into a billion little companies. Usually the company will hold on to as much as stocks as necessary to make sure that they have control of their company. The rest they will sell, and that's where the stock market comes in. Have you seen the stock market? I came to buy a couple of stocks, but everybody's gone. Did this thing finally close down? I knew it. I knew everything was going to crash. So what is the stock market? It's nothing more than a Lego store. If you think about going to the store, you can go to a couple of different stores and buy Legos, right? You can go to Walmart, you can go to Amazon, and you can go to the Lego store. Those are the three biggest Lego stores that you can go to, right? Same thing. If you want to go buy stocks, you can go to the three biggest ones in the U.S., NASDAQ, S&P 500, and the Dow Jones. Those are nothing but Lego stores, but for stocks. So if you want to buy a stock, that's where you can go to buy the biggest companies in the U.S. It's nothing more than Lego split up just within the company. I was going to put some money in the stock market. Things been around for over 100 years. The day I want to show up and invest some money, everybody leaves. What are the odds of that? All right, so why do companies issue stocks? Why does a company that's one whole piece, so why does a company issue stocks? Why does a company go from one whole piece into a billion little pieces? It's simple. It almost always comes down to capital. They're trying to raise money for something. They either have new ventures they want to go into, say Tesla, need more money to fund projects. Maybe some of the early investors are wanting to get paid off and take their money and go. Either way, they always break off into, they always go public in order to get money. All right, so what affects the price of a stock? In the short term, it could be insecurities with the company. It could be overestimating what they're going to do. Hype. Long term, it's usually more established and more based on actual data rather than hype. Short term usually build on hype or over demand. Long term, you see the more balanced, rational prices. Remember, when you're going to the stock market to buy a stock, you're buying a literal piece of a company. You're not buying anything that's money. So when you're looking at your investment, say you buy Under Armour for $21 and it dips to $17, if you hold on to that share of Under Armour, you haven't lost any money yet. So if you don't want to lose money, don't sell when it's below a price that you're unwilling to sell it for. Warren Buffett uses the illustration of his house. If you buy a house for $100,000, you're living in it, you're good and cozy, you know you're going to live there for the rest of your life. Now, all of a sudden somebody comes in and offers you 80 grand for it. You're not going to sell it because the price is down, right? You're going to keep living there. You know why you bought the house. You know what the future is. You know what the future is for the house. Same thing when we buy a company. We're not going to sell a company just because the price is down. We did our research. We know why we bought the company, why we believe in it. And so we're not going to sell a company just because the price went down. P.S. If you think the stock market is going to crash forever and is never going to bounce back, you should probably be investing in gold or some other good commodity that's going to increase in value more than cash. Cash isn't going anywhere with the value, so you might want to start getting some gold or silver or platinum or something. Potatoes? I don't know. It's got to be something. All right, why does the average person care about the stock market? Why do we care about these little Legos, and why do we care about all the hype? Quite simply, we don't want to work forever. And if you do want to work forever, then don't worry about the stock market at all. You just keep on working and be happy. Go have fun. All right, but the rest of us, we got to find out some way to get our money to work for us and to grow. And one of the best ways historically is the stock market or real estate. One of the simplest and lowest barriers to entry, especially now, is the stock market. We can get in with virtually $20, you can buy one share of something. You're officially playing the stock market or investing. Don't use playing, that's a bad term. We're investors. So we care about the stock market because we can get better rate of returns than any bank can give us. Banks will give us less than 1% usually. The stock market historically ranges out at like 7%. We can't save our way to retirement, and we can't save our way, we definitely can't save our way to retirement at 1%. Even with compound interest, that's not a lot, and that won't get us there. So we care about the stock market because it's one of the avenues that we can choose to make sure that we have enough money to retire. We don't want to work forever. Even my 4-year-old son, I'll ask him, why do we save money? Why do we save money? And he answers, because we want to buy toys. And I always throw in, and emergencies. He's right. We save money for toys, and then I throw in emergencies. And then I'll ask him, why do we invest money? And he answers, because we don't want to work forever. If you do not want to work forever, then we have to find out a way that we can get our money to grow a lot quicker than what the banks offer. One of those two ways is the stock market or real estate. All right, so now that we know why we care about the stock market, what do we need to do? First things first, we need to figure out if we are one of the types of people that can do it ourselves, if we're willing to put in a little bit of research and effort, or if we have to hire somebody to do it for us. Both are acceptable options. If you think you are an individual that can't sustain the volatility of the market, if you think you're going to sell that $15 Under Armour share because it's now $15 and when you pay $20 for it, and you don't think you're going to be able to get over that stomach pain, then you probably do not want to control that yourself. You want to hire somebody to do it. Hire somebody if you need to. And if you want to do the work yourself, if you're willing, there's all kinds of avenues to help. YouTube, plenty of stuff on YouTube. Phil Town, I watched him, I read his book. I'll leave a link to that below. It's really helped me to learn how to do it. What are we going to do? We have to figure out if we can do it ourselves or if we're going to hire an investor to do it for us. Both are acceptable options. What is not acceptable, from my standpoint, is not doing anything because we're scared. I'm not investing in the stock market because I don't want to lose all my money. Yeah, we could lose money. Historically, not too many people have lost all of their money in the stock market unless they're being foolish. I strongly encourage, even if you hire somebody to do it, to do the research yourself. You can do the research, you can know where the stock market is, and you can maybe take control in the future. One of the best things that we can do for ourselves with the stock market, one of the biggest reasons why we can do it, is that control. A money manager, someone that's investing for you, is critiqued off results. If we are investing for ourselves, while we may get a stomach ache when we see the stocks drop a bit, we know we're not going to lose our job, we're not going to lose our house because of bad investments. We can ride it out, and we can wait for it to come back up, because it almost always does, especially if it's a good company that we've done our research on and we know that they're going to be there for a long time. They've got that moat that Warren Buffett and Phil Towns talk about. Either way, we have to invest money somewhere if we don't want to work forever. Me, I'm picking the stock market first because the barrier to entry is way lower than real estate. Within 5 years, I want my first rental property, and I want to have 20% to put down on it. So that's a 5-year plan, 5-year goal for that is one rental property within 5 years. Big picture, I want to have enough to pay the monthly bills and monthly expenses, but that's a ways. But right now, learning the stock market. So what do I recommend? I definitely recommend that you learn for yourself what the stock market is. You can usually start just by downloading Yahoo Finance, MSN Money, Market Watch. There's all kinds of stock market apps. All right, so you can download some of those apps and just start learning. I'll leave a link to a book that I started off with, Phil Towns' Rule 1 Investing. He teaches you to use a similar system to Warren Buffett, where we figure out what the price of the stock is worth, and then what we are willing to pay for it. You can download apps such as Robinhood or Webull. I'll leave the links down below. They don't charge any commissions on trade, so you can get in and you could literally buy one stock. My first stock that I ever purchased was Facebook, just one stock. And one of the biggest things I learned from buying one stock was that it's okay. Once you get there, once you start realizing what's going on, and you realize that it's going to be okay, you start to calm down. Just because we show up in the stock market doesn't mean the stock market is going to go to zero automatically. People have been doing it for quite a while now, and we can just join the party. Let me know in the comments below, what's your opinion of the stock market? Do you like to use stocks? Do you like to do real estate? Or do you like to use another investment avenue? I look forward to hearing from you guys. Until next time, stay focused and work hard, and enjoy your lives.